What's up, traders? Welcome to this week's episode of the Weekly Watchlist, where I do a technical analysis and give you my thoughts on the tickers up here on the left. So as always, we have our broad market, we have our core list of companies, only a couple of stragglers with earnings coming out, NVDA as well as Alibaba, I think, but we'll see about that. And then I have 8 trade ideas to share with you towards the end of today's video. So definitely stay tuned for that. If you want to join the Discord where some of these ideas came from, it is linked down below in the description. It's completely free, as well as our free swing trade newsletter. All those resources are linked down below. Let's just jump right into these charts. Jumping right into our SPY weekly chart, talking about candle structure and location as we always do. For structure, it's certainly a hammer stick candle, and in terms of what that means, obviously buyers responded to all of these lower prices, leaving in our wake a little bit of a lower wick. So that is bullish, of course. Closing up here at all-time highs is bullish, respecting the prior week's low is bullish, and of course taking out the prior week's high is also bullish. So nothing about this is screaming top just yet. And again, no matter how you feel about the market, we have to stay objective. We have to look at the technical levels, what's going on with our support and resistance trend lines. Again, here you are. Support trend line never even came close to being violated. This one, if we draw it in, we know that we got a nice bounce off of it here, and we are still above. So from a support perspective, all of those things are intact. Now, I will make your attention to the fact that we have this, though, which is a resistance trend line, of course, and we're sort of butting our heads up against it. It's not to say that it can't break, but it's just something to keep in the back of your mind as we start moving forward. What I think is far more important is if we drill back down to our daily time frame, pop our levels back on this chart, is the break out of balance that we saw here. So if I just zoom in, if you were familiar with Wednesday's video, the midweek market update, we definitely talked in length about this area here and the fact that if we break out to the upside, we're basically looking for a range double here. So if I just scrunch this up a little bit so we can fit a larger box on here, do something like this. Again, a range double, just a quick eyeball test would bring us, likely somewhere up here around 446 as an upside target. And Friday's breakout was extremely lackluster. I mean, for breaking out of how many days of balance was this? 1, 2, 3, 4, 5, 6, 7, 8, 9, 10 days of balance, essentially. It definitely felt like the market wanted to go, especially on a good NFP number. I mean, there was just nothing that really could have been better, really, for the breakout here. So a little bit of a question mark, the fact that buyers really didn't just rush into this and, take us up and out of this balance. I mean, there's a lot of pent-up energy in this area, and just nothing happened on Friday. So we'll see if there's any sort of follow-through come Monday. And again, 446 would make a nice upside target here, just based on range doubling rules. But the thing that this also brings into question is, okay, we know that we're approaching that resistance trend line from the weekly perspective, which we mapped out. If this is a failure to really break out of this range and we start to trade underneath this 441.10, then what did we just do? Well, certainly look above and fail. And as we know, we always target the bottom end of the range, which just so happens to be these 2 lower wicks, closer to, let's just call for round numbers sake, 436, which also coincides with a gap fill. Now, keep in mind, there could be some bumps in the road along the way down there. It doesn't have to go all the way down there, but that is the target, right? So knowing that, there's a bump in the road here. Prior double top, it also acted as an intermediate area of support in here, and there was some intraday interaction here in those 2 lower wicks, if you remember back to earlier on after this huge leg up. So keep that in mind. Also keep in mind the support trend line, which we've discussed in length now for a couple of videos. If I just scrunch this up, you can see where it sort of has come from a little bit more here. And let's actually just pop this back onto auto. So here you go. If I scrunch this up now, you can see coming all the way in from this low and only being violated on a major gap down, only to be recaptured. I do think we should place still a little bit of importance into this support trend line, which could coincide for a super support at this 438 mark, which we know we just discussed from in here. So that's the potential for a little bit of rollover here. Again, you got to think, why wasn't this breakout a little bit more, exciting? Why wasn't there more energy being expelled here? It's just something to ponder, okay? So I'm not saying the market has to roll over and retarget the gap, but it's one scenario that could potentially play out. As we know from the weekly, it's never makes sense to try to time a top. You'd rather just buy dips in a bull market. And as everything sits, if we came back down to the bottom end of balance, it would probably be a buy, in my opinion, at least for some sort of a scalp, right? So all things considered, if things get absolutely nasty, we blow through the balance and go lower. A couple of levels that have not changed for the past couple of weeks here are going to be your 431.70 prior area of support in here, then resistance, also an intraday. There was a point of control in here. We pulled back perfectly to it. There was a midweek market update about that level, so that should be on your radar. And then we have single prints underneath 428.33. Again, look at the distance here. I'm not calling for that at all, but I just want you to have these levels on your charts. That way you're prepared should anything, sort of develop here. Again, the path of least resistance is still higher in the S&Ps. Let's move over to the Qs. So having a look at the Qs now, you can see the picture is slightly different, right? If I just talk about that same area of balance, here you go. We broke out of it on Thursday, and then we failed back down into it on Friday. So that's interesting to me that the S&Ps are trying to move higher, but the Qs are acting as a major drag on this market and trying to pull it lower. So unless this, early on in the week can trade back above this 368.50, I would really have low confidence in that S&P really getting moving to the upside there, up and out of the balance. Now, this technically is a look above and fail, right? We closed above the balance, and now we've closed below the top end of balance. So as we know, what are the rules stating? Well, technically the target should be all the way back down here at 362.67. But again, with the push and pull between the S&P and the Qs, it's really the financial sector and the tech sector. You just have to be skeptical of that. Okay, so I'm not calling again for a move all the way back down here in tech. But with the S&P's sort of lackluster break, maybe it goes sideways, maybe it dribbles down, lower slowly. I don't think it wants to feel like a huge liquidation break coming out of nowhere, just slamming us down into that area. So those are kind of my feelings on the market. But from a technical perspective, yes, this is the target on the look above and fail here, 362.67. Anything underneath that, again, we just have yet another range underneath us in terms of, playing these sort of balanced rules, if you will. If we trade back into that one, again, where's your support? Maybe you make the argument there's something here closer to that 358 or 359.25-ish area, but really the support is here at 355.22, and that's quite a ways away. Again, I'm not trying to bring these areas up to be a bearish call. I'm simply questioning the fact that, yes, this is a look above and fail. We have to at least consider the possibility for a move lower here in tech. Now, if the SPY gets, roaring on early Monday morning and just huge breakout to the upside starts, then where do we expect the Qs to go? Well, simply over the all-time high here at 369.91. Then let's go ahead and do our balance rules. So a quick eyeball test for a double, doing something like that. Where does that put us? We'll use the cursor here up around 373.77. Just call it 374 for nice round numbers sake. That's the ultimate upside target here to fulfill the breakout and doubling of this range here inside of the Qs. Again, everything's intact in terms of if we just zoom out, daily and weekly, trend is certainly up. We could draw in a support trend line, something off these lows to that pullback there. You can see that's still well intact too. So not a bearish call, simply something to consider that these S&Ps and the Qs are out of sync. And last but not least, the beast, we have IWM, Russell 2000, and our small caps, and not a whole lot to report here. It's been a number of weeks we've just discussed. Here's your balance. Here's the midpoint of the balance, and we're trading right at that midpoint. Never a good idea to initiate a new trade here. You're just, going to be in store for a lot of chop, and that has been pretty evident over the course of the past couple of trading weeks. That's nearly impossible to swing trade right there. So that being said, don't advise any new positions inside of the IWM, rather just looking at it as a neutral risk signal. It's not completely risk off until we start to trade underneath this 208. Maybe you call it 210 from these most recent lows in here. That would start to be okay. Maybe start to be a little skeptical of more of an aggressive stance on the market. But for now, we're still trading well above that. And again, it's not a bullish, completely aggressive risk on signal until we start to take out the highs up there around 234.35. So as it sits, just neutral in the IWM if you want to take intraday scalps on it, if that's something you enjoy. I'm not, trying to stop you from doing that, but in terms of a directional swing, it just doesn't make sense at this point in time. If you've made it to this point in the video, I'm sure you're enjoying the analysis. Hit the thumbs up button, subscribe to the channel. That way you know every single time a new video comes out. Kicking off our companies here with Apple, I really want you to have this level on your chart here. It's 146.50, just for a nice round number's sake. If you've been watching intraday, it has provided nice breakouts to the upside on any sort of holds, nice reversals off of it as well. And right now we're trading underneath it, so it should be on your radar as resistance. Please put that on your chart. That being said, from a longer time frame perspective, I also want to draw your attention attention to the fact that we're doing something like this, and it's just a massive bull pennant from the daily perspective, which of course is a bullish pattern. And it's no surprise that we're getting a little consolidation after this really impressive run off of the lows here pre-earnings. So, the chart looks healthy to me, I guess is what I'm trying to get at in essence. It wouldn't really bother me if we break this support trend line here sideways through time. We know that we really only place a lot of emphasis on trend line breaks when they happen aggressively through price, and it simply doesn't look like that's going to be the case here, as Apple just holds steady sideways around that 146.50 number that we just mentioned. So if it breaks, it breaks, but just note that we are at it right now. If we get any sort of upside follow through off of the support trend line, your key break is over, let's call it 148, the nice round number here, to come up and revisit, I would argue, all-time highs and potential for continuation higher into blue sky territories, whole and half dollars, intraday levels that do form here inside of Apple. Now to the downside, since we did close underneath resistance, we are at the support trend line. If it breaks, again, sideways through time, I would expect sideways consolidation to happen. Up in this box, the ideal area to hold as a new higher low would be here at 144.31. If you just look at this, here's your major low. There's a HL for higher low. Same thing happened here. Here's a HL for higher low. If we did pull back into that 144.31 and do something like that, what did we just do? Daily uptrend is, held intact with yet another higher low. So that's the ideal situation to the downside. Of course, if it breaks, we do have a level here at 141.70. Moving over to Netflix now. This one is trying to resolve its moving averages. It looks like it's been very choppy around this area here, certainly coming up and breaking back above our 521. But if we look at the close here, it is technically underneath. It's not to say we rotate all the way back down to the bottom here at 505, but I would, start to think a little bit harder about just going blindly long for a breakout all the way up to our 533 mark. So as it sits, again, the chart pattern isn't abundantly clear to me. We did have some sort of daily bear flag that looked like this. Obviously, that's not working. It's not breaking down and taking us to those lower targets. But as it sits, just choppy, right? So watch out for the moving averages underneath. We have 514. We have 505.75, which is the lows here. I'd watch for that as a flush point. Should we get down into it? I'm not saying we have to, but if we do, any sort of dead cat bounce here that consolidates low, I would watch for a flush underneath, at least 500. If not, our next target underneath here at 487.30. To the upside, if we get going over these highs in here, let's not ignore the upside, of course. If there's any sort of breakout over this 525, we'll call it, for a nice round number's sake, I would argue that it probably takes us, let's actually remove that area here. I would argue it probably takes us up higher just to the next level, 533.81. But with that candle close there on Friday, just not overwhelmingly excited about it. I would have preferred to see some sort of doji, small-bodied indecision candle up there. It simply isn't the case. So watching out for just kind of neutral intraday trades only here on Netflix. It's not abundantly clear based on a daily pattern. Shifting focus over to Tesla now, we can officially get rid of this resistance trend line. We'll clean up this chart a hair here, and what we'll do is extend the support trend line because it does look like we are rolling over slightly. If we were to come into it, you would want to see that act as support, obviously, and that area is going to be anywhere, depending on time of week, anywhere from about 675 all the way up to about 693 should there be any sort of pop, and then revisit something like that later on in the week. That being said, this is a rather bullish pattern in my opinion. It looks like we, did hold on to. We've talked about this in the past, right? There's that area we held on to. Nice move out of it, and just kind of consolidation up here at the highs instead of an aggressive rollover. Now, Friday looks like it might be the start of that, but the prior three candles were just kind of holding up here. I'm not going to completely write off, this as a bullish pattern unless we take out and start to trade underneath this 694.18 area, because we know that's kind of where the breakout started, right? We have a number of touches of resistance in here, one here, and one here. I would imagine it holds up as support, at least on the first touch from the top side down. So watching for support there, 694.18. Any sort of reversals, you're just looking to come up and revisit these highs. Let's clean up this chart a little bit. This level is not as important this time around, and I'd rather focus the attention here on this small pressure cooker top building at 724.41. If it goes, your next target up above is right around 750. Nice round number as well. After that, I'd probably call it this high in here, close to, just shy of 800. That's a ways away to the upside, though. Not saying Tesla can't get there, but, a bit of a stretch, right? To the downside, obviously, again, we want to see support hold here at 694.18, support trend line after that, and then should it break, maybe it fills up the triangle here. That's the triangle I'm discussing, down to about 667.53. I would argue that has to hold there. That has to be the line in the sand to the downside, simply if we want to remember our higher low scenario. So here's your anchor low, here's a higher low, here's a higher set of lows, so we'll just put HL in here. If we pull back and hold that area, which we just discussed as prior resistance, now support, that would be a great potential area area for some new higher lows to develop and then continue this daily uptrend here. So Alibaba, just words do not describe how disgusting this chart is. I mean, look at how choppy the action is here, all of the gaps that remain unfilled here and here, as well as underneath us. It's just not something you want to be interested in swing trading. It's intraday trades only. So that being said, there's not a whole lot I can give you in terms of price levels to watch. Maybe this one in here kind of baked in around 196.50 is important. You can see all the times we've interacted it in here and here and here, as well as closing on it on Friday. If it flushes, maybe, just have a bit more bearish stance. Look for bearish intraday patterns to take us back down towards the top of the gap here, 190. Anything underneath fills to the upside, say we reverse, hold up above. You're just looking to target up above here at 203.60s. Anything after that, bottom of the gap from in here at 206.88, and then obviously gap closes up around 212. Again, nothing too directional here. Intraday trades only. Checking out Facebook, this one came directly into our support trendline gap fill area, printed a hammer candle, and went higher. I mean, we talked about this in the Discord. This was a textbook play. You take out that high, you just trade it higher right off of this major area of support. Great trade if you were in the Discord and took that one with me. To the upside, we still have a little bit of gap that remains unfilled, and based on the reversal off of the trend line, I would just, target the gap fill all the way up there towards 366.97, call it 367 the whole dollar, especially if the Qs can get out of that funk and more follow SPY into all-time highs. That would be a very easy trade early on in the week, in my opinion. Just looking for a nice scalp there. Anything higher takes us up into those all-time highs around this 375 whole dollar. Didn't want to cherry pick the wick up there. After that, just blue sky territories, right? So on any sort of rollover, if we fill the gap and reverse out of it, I wouldn't place as much emphasis on the support trend line this time around, simply because of the proximity of touches that would be. Typically, we treat support trend lines just like we treat horizontal levels. The more touches you get in closer proximity, it starts to act like a pressure cooker top, or in this case, a flush point. So I wouldn't place as much emphasis into that as support, and rather watch for the break, any sort of consolidation just above, even breaking it slightly sideways through time, then look for the flush lower. Now, I do want to remove these yellow lines in here. The gap did fill, obviously, so we'll clean that up a little bit. And our supports, I would argue, based on this hammer here, the low was certainly an area of support, but it's just above a prior balance low from in here. That's at 347.84 down to about 344.90, call it 345 the whole dollar. Treat this as a zone. If we do get that flush, which we just discussed, of that support trend line, the 50 SMA is there as well, and you can see that it has acted as a saving grace in the past. So that's a potential long entry there with tight stop underneath, and then looking for the reversal up and out of that. Again, depending on time of week, it could happen, if it happens, right, sometime over here, and at that point in time, I would imagine 50 SMA is slightly above or close to that 350 nice psychological number. So a potential trade idea there if there is some sort of rollover in the Qs, but as it sits, again, we already sort of got that reversal out of the support trend line, just looking for continuation now, maybe to come back up and revisit these highs. Taking a look at NVIDIA, we obviously got the resistance trendline break here, so let's remove that. And you can see we're moving out of this choppy area here towards those all-time highs, backing off slightly. So what we want to see, of course, is to maintain the daily uptrend, the reversal that we got off of this level in here. And to do that, as we've talked about in length in today's video, how do we maintain those daily uptrends? Here's a higher low. Here is a higher low. If we do something like that, any sort of pullbacks here, prior resistance should start to act as support here at this 198.50 mark, call it 200 if you like psychological numbers. And if we do get the reversal, that would be another perfect higher low from this daily perspective, thus preserving the daily uptrend. After that, obvious upside targets are the all-time high and breaking it for blue sky levels up above, whole and half dollars intraday levels that form here on NVIDIA. To the downside, if we do break down underneath this sort of 200, 198.50 area of support from prior resistance, of course, just target the areas that we used as prior higher lows. So we have 192.83, 187.43, and then of course after that could get a little bit uglier all the way down here towards 178.66. But as the chart sits, I mean, nothing about that. It's not screaming bearish at all, right? This is a nice controlled daily uptrend. We're seeing a little bit of give and take, nice give, nice little bit of take here, and there's a nice lower wick that printed on Friday as well. So it looks like buyers are trying to respond, but they're just taking a breath, right? This is a nice move here up and out of that area of consolidation. So chart looks healthy. Again, main area to watch is 198.50. Microsoft, also a phenomenal looking chart here, just pushing up and putting more pressure up against the all-time high here, now forming a pressure cooker top and an area of balance. So looking for the break over 290, the whole dollar just about to set us off into blue sky territories, whole and half dollars intraday levels that do form. If we want to just use the eyeball test here for a target using our range doubling rules, so there's the range, I would argue that's a rough double there. We're looking for about 195 to the upside, just again, based on that quick eyeball test. So that being said, what else can we look for? Just zooming in a little bit, any sort of consolidation, that remains in this box, fine, healthy. Again, you want to see those Qs really confirm and maybe turn around, follow the S&Ps for the breakout higher. That would be a nice confirmation tool. But if not the end of the world. I would still be willing to take the break here. Just, keep a closer eye on it per se. To the downside, obviously we have this gap underneath us, which has not filled all the way. This line should be adjusted slightly lower to this wick in here, but just for support's sake, we're keeping it up at 283.80. If we break down underneath that area, there is a gap to fill down to 281.55. That's a tradable play, right? If that, there's enough meat on the bone there per se to take that trade for the gap fill. From there, I'd watch for a gap fill reversal just based on the strength of the daily uptrend. So 281.50 is a line in the sand. Underneath that, we start to get into some of these lower targets. It would be a more aggressive break, in my opinion, down here towards 275.23. After that, this gap, this yellow line in here, is going to act as a target, not so much a range to actually trade as a gap fill play. That's down there at 272.46. Again, not really anticipating it's in play based on the strength of this daily uptrend. As we discussed with Apple, doesn't really bother me so much that we're breaking this support trend line sideways through time. You really only want to focus on those breaks when they happen aggressively downward through price. And last but not least, the second beast, we have Amazon. And this one can't seem to get out of its own way here, just consolidating after the massive gap down. I will say the gap has reduced to, roughly, let's call it 200 points now instead of the 300 points when it closed weak at the lows. So, same rules apply. If we start to take out that 33.90.50 mark, just look for higher, a couple bumps in the road here, 34.30. 50 SMA, the blue line, is currently trading at 34.65. I imagine that'll start to flatten out and or go lower as we trade sideways through time. And then after that, it's really kind of smooth sailing up towards the top end of the gap, closer to 35.52, 35.80, that area up in there. So, there's potential for that play to unfold. I'm not saying it's going to happen all in one go, not in one day, not in 1 week, but just watch out for a slow and steady grind up through this gap, considering how large it is and how there is no, recent price history trading through that area. Now, of course, the bear case is just simply a break underneath the earnings gap down low, which is here at 33.09, call it 33.10. The 200 SMA will, in my opinion, be the saving grace underneath us. I'd look for a quick intraday scalp off of that area if you are someone who likes to try to catch, quote unquote, the falling knife, if you will. Underneath that, though, it does kind of get ugly. I'd argue that the next major area is around 31.32. Just as it sits, play this one with caution. It's just over and under, right? You either take out the highs for the over or you wait until the under underneath that 33.10. Quick reminder to hit the thumbs up button and subscribe to the channel if you have not done so already. And let's get into these trade ideas. First one is going to be here on CLF for Cliffs. And if I just do something like this, you can clearly see we're coming back in after a nice bullish run to retest a prior area of resistance, which is now starting to act as support. You can see a number of lower wicks in here, notably a hammer candle printing there on Friday. So looking for a bullish pullback buy. Simply, if we do something like this with our Fibonacci's as well, going from low of the move up to the high, you can see that we've respected thus far the 38.2 Fibonacci area, which coincides with 23, a nice psychological number, pretty close to our 23.28 pullback and area of resistance as well. So to me, looking for the bullish pullback buy to take us back higher towards that 26 round number, this most recent high in here. Not really interested in the trade if we start to trade underneath that 23 round number. Next trade idea is going to be on eBay, and this one is sort of catching the falling knife yet again. We discussed that briefly on Amazon, right? But so a little bit more advanced. This is something that you have to watch very carefully intraday. I would just point out that, we're kind of coming into a zone of support. If I do something like this, you can just see that we had a number of peaks, prior resistance, then the zone here as support. So if we do move a little bit lower, looking like a potential oversold bounce play, again, this is a quick scalp. You're not going to potentially hold on to this looking for a major reversal up to 74. You're probably just looking for a couple of dollars intraday out of it, not a massive, swing trade here for a reversal. Earnings are coming up around the corner. I believe they're the 11th 11th. Yes, the 11th, and I think after the close, so 4 p.m. after the close there on eBay. Next up is going to be LVS, and this is a longer-term idea rather than a quick trade. So if I just get us some more time here, we'll go to, let's make this a 3-year chart. You can obviously see where we went on the first initial drive lower when the big announcement came out. You know what I'm talking about, a long time ago here. And with the potential for a round 2 coming in, or a winter that is maybe a little bit rougher than the summer, I think if we come back down into this area, we already know what the worst case scenario is kind of like here. So there's potential to kind of monitor for a bigger reversal should there be a move all the way back down towards 34. I don't think things are going to be as nasty as they were on that first go around. So any sort of move lower here, maybe even treat this as a zone towards 36 for a longer term swing trade account. Maybe you put this in your retirement for a couple month swing. I could see the potential idea that you would go long in here looking for a bounce to move back higher. Maybe you don't double your money this time. You don't go from 34 up to 68, but instead you maybe go from, I don't know, say you don't even nail the bottom, call it 40, and you come up and you make it to 50. That's a solid trade in LVS for, not doing a whole lot. Very simple idea here in LVS. Next up is SBUX, and we're flipping back over to more of a scalper / day trader mindset. Let's go ahead and turn this back over to a year so we're not looking at too much data. And what I want to point out here, I believe this is the support trendline play. If we do something like this off of here and to here, nope, not this one. It's coming up next. Oh, yes, it is. Sorry, I drew it from the wrong angle. Here we go, from here to here. That's what I was looking for. Yes, that is the one. And you can see that we are printing hammers right off of this support trendline. Anchor, touch 1, touch 2 to the T, and now respecting it here on touch 4. You just want to wait for a little bit of a pop up and over that cluster of highs in there from those hammers. So if I do something like that, your breakout's just above 119. Looking left, there's not a whole lot of market structure all the way until we probably get up towards 120. So a decent little trade here with a couple of points of meat on the bone for not a whole lot of risk, right? Your stop loss goes just underneath what happened on Friday, the lower wick from in there. Next trade is going to be on Groupon, and Groupon is another knife catching play. Again, there's a couple of these in this video, and this is going to take a more advanced sort of trader to spot. You have to monitor this. You can't just, set it and forget it on your screens and walk away. Instead, what we're looking for is any signs of potential reversal here at this sort of area of daily support. You can see here as well as here, and I would argue very aggressively oversold into this area at 30. So any slight signs of potential reversal could set off a nice little dead cat bounce. Again, you're not sticking around. You're not looking for a reversal all the way up to 52. Never mind the highs up here towards 64. You're simply looking for a quick little scalp. I would argue that the most you could even think about holding out for would be a back test of this prior area of support, which now should act as resistance up there about $5 higher, $35. Next up, we have PENN for PENN International Gaming. And the trade idea here is a simple pressure cooker top. If we just zoom in a little bit, there we go. You can see that we have this area of resistance very clear at 73.75. If we start to take it out, as well as that 50 SMA, I could see the argument for moving higher, probably into our next major area of daily resistance, which is up here closer to 85. Maybe a bump in the road at this prior double top around 80 the whole dollar. But, regardless of how you slice the pie here, still some deltas left on the bones. Call this 74 to 80. That's a $6 trade, right? If we make it there with some ease. I like the fact that this inverted hammer printed off of the 50 SMA and didn't really retrace too far into that breakout candle range, of course, from earnings. So bullish here on PENN. Not really interested in the trade if we start to violate the 50% mark of that breakout range candle, which let's just put our number to it for you guys at 67.52. Underneath that, start to get a little bit more skeptical that the downtrend here will continue lower. Next up, we have Peloton. This one is coming into an earnings cycle a little bit further out on the 27th. Not too much of a concern right now. But what I'm thinking on this one is simply a symmetrical triangle that's building here. You could probably come in from the highs here. Yep, do something like that, and then come in from the lows here. You can see, actually, we've broken it to the downside. So for me, looking for, the idea was going to be a break of the symmetrical triangle, just simply based on the fact that the overwhelming trend is lower here. We're getting tangled up in the 200 SMA, can't really get any acceptance above that. So looking for potentially lower here. If we can break this horizontal area, this is another piece of the puzzle. If we can break that, I would argue we just come down to the next area of consolidation lows at 103.50. And again, speaking of deltas and how much is left on the bone, that's about a $10 trade, right? So plenty of meat left on the bone here if we get any acceptance underneath 113.20, maybe a bump in the road halfway through the range here around 109, 108. Yeah, let's just call it 109 the whole dollar, but really looking for lower towards the bottom end of this range from in here. Remember, balance rules, breaking out, moving back in, look above and fail, all that good stuff. This is the target at 103.50. Wouldn't be interested in the trade, at least to the put side, if we start to consolidate back above, maybe that 50 SMA, or just don't flush the 113, right? You really need to see that break there for the trigger to go short. The last trade idea here is going to be on IBM, and this one is a bullish trade idea in the face of that bearish one we just checked out. And if we just do something like this, you can clearly see an area of resistance, in here, not the cleanest, but in more recent times, certainly support in here, resistant, resistant, and resistant on Friday. 50 SMA is baked in. I would argue any sort of break here just takes us to this next obvious target, which is at 147.21. Would not be interested in the trade if we start to break this faux trend line, right? I'm not going to draw it in simply because we had this outlier here, but if we start to trade underneath us, something like that, not interested in taking the break over 144, at least until it comes back up, pulls back one more time, and then boom, maybe you take it something that looks like that. But again, any break of that support trend line, kind of putting this one on the back burner. We have the target up above 147.21, maybe hold out, monitor for continuation on a piece up to the high towards 152 the whole dollar. So that's going to wrap up today's video. If you enjoyed the video, learned anything new, let me know down below in the comments section, or simply leave the video a thumbs up. That goes a long ways. And all of that being said, I wish you all a green trading week.